Welcome to the Around Money and Emigration channel. If you find our content helpful, don't forget to give us a thumbs up and subscribe. Now, let's dive into today's topic, digital nomad visa with no tax or low tax in Europe in 2024. Digital nomads are individuals who use technology to work remotely, often from various countries across the world. And today in this video, we're focusing on Europe, a continent that is welcoming this trend and offering tax benefits to digital nomads. A digital nomad visa is a permit designed specifically for remote workers, allowing them to legally live and work in foreign countries. Europe, more specifically the Schengen area, is a favoured destination for digital nomads given its policy of free movement amongst member countries. But if you hold a Schengen/EU passport and intend to spend more than 3 months in the country of your choice, you should register yourself with the local authorities. The UK, USA, Canadian and Australian citizens with valid UK residence permit can spend up to 3 months without visa, and then making an application for a long-term digital nomad visa is compulsory. When you don't hold a passport of the Schengen area and you are not a citizen of the mentioned above countries, you need to obtain the digital nomad visa before entering the chosen country. Visa requirements for digital nomads generally include a valid passport, proof of income and a work contract, proof of health insurance, a criminal background check, and the address of accommodation in the chosen country. In most cases, the length of the visa is 12 months, and visa holder is considered a tax resident after 183 days spent in the country. Now let's talk about 5 European countries offering tax benefits for digital nomads. First on the list is Croatia. As we embrace the digital age, Croatia offers a dedicated visa for individuals working remotely. The minimum income you should demonstrate when applying for a digital nomad visa is equal to €28,000 per year. In Croatia, one must satisfy certain prerequisites to be classified as a tax resident, applicable either through 183 days or more in the country over a 12-month period, or by having a property at your disposal for a minimum of 183 consecutive days. As for tax rates in Croatia, the tax structure on professional income is split into 2 categories. An initial 20% on income up to €48,000 and a 30% tax rate on incomes above this. A local surcharge, determined by your residential location, may also be levied on the total federal income taxes due. Surcharges range from 0% to 18%. However, for those hailing from outside the Schengen area and require a visa, there's a twist. With the digital nomad visa, you may be eligible for an income tax exemption, but only if you remain a tax resident in another country. Additionally, for freelancers, there's the paušalni obrat, a lump sum taxation regime. This specific tax scheme applies to freelancers earning up €40,000 per year, limiting the income tax to just under €1,000. Tax rules can be intricate and subject to changes. Regarding social contributions, these compulsory payments typically include health insurance and pension funds, the exact amount of which depends on whether you're an employee or a freelancer. If you are subject to the general income tax rates, the social contributions amount to approximately €3,500 per year. If you apply the paušalni obrat, a lump sum taxation regime, you have the possibility to pay a fixed amount of social contributions of around €2,250 per year as a self-employed individual. Summarizing tax residency in Croatia for digital nomads is a good option if your professional income is below €40,000. You can profit from the beneficial regime for freelancers. When exceeding that threshold, you could always opt to pay taxes at the corporate tax rate. You can do this by setting up a company or by opting to be taxed under the corporate tax rules as a freelancer. Next, we venture to the sunny island nation of Malta. A potential destination for digital nomads, Malta offers a nomad visa only to individuals from outside the Schengen area or third country citizens, allowing them to work remotely amid its mild climate and historical significance. It is important to highlight that Malta will exclude you from the digital nomad visa if you in any way perform services for Maltese companies. When applying for a digital nomad visa in Malta, you need to meet the following criteria: work for a foreign employer or work as a freelancer for foreign companies, be a partner or shareholder of a foreign business, and conduct business on its behalf. Those requirements are defined as authorized work. The required minimum gross salary is €42,000 as from the 1st of April 2024. Now let's delve into the tax implications. Malta determines tax residency based on factors such as the duration of stay and long-term intentions. And the new tax rules which have been introduced recently state that you will only pay income tax on qualifying income from authorised work at a rate of 10%. Furthermore, you don't have to pay any income tax during the first 12 months from the date of issue of your Nomad residence permit. Another thing worth mentioning is if you set up a company in Malta, you can benefit from a low effective tax rate of 5% due to a tax refund system. This means you get a refund for 30% of the total 35% in corporate taxes. In conclusion, by combining your personal tax residence with a Maltese company, Malta starts getting more interesting. Malta is even more compelling if you can set up your company there while being a tax resident in another country that doesn't tax foreign dividends. Our next stop is Romania. There are 3 ways by which you can become a tax resident in Romania: spending more than 183 days in Romania during a 12-month period, having the centre of your vital interests situated in Romania, and being domiciled in Romania. This means you have a permanent, home-owned or rented available to you in Romania. The minimum income required when applying for a digital nomad visa is equal to 3 times the average Romanian salary, which is now €1,100 per month. This indicates you need to be able to demonstrate an income of €3,300 per month. Romania offers a flat personal income tax rate of 10%. Dividends are subject to a tax rate of 8% and are also taken into account to calculate your health insurance contributions. There are minimum and maximum social contributions. The actual amount of contributions depends on your income level compared to the minimum income in Romania. Social insurance contributions amount to 25%. Health insurance contributions are levied at a rate of 10%. If your income exceeds around €25,000 per year, you will need to pay those rates on your actual income. Setting up a company in Romania, particularly a micro company, can be advantageous due to a 1% corporate tax rate on revenue. There are some conditions that apply in order to qualify as a micro company. Your annual revenue cannot exceed €500,000. At least 80% of your revenue should come from activities other than consulting or management. The micro company should have at least 1 full-time employee who works for the company as an employee and not director. You should also account for withholding tax when taking out a dividend. Withholding tax on dividends equals 8%. When you qualify for the tax regime for micro companies, you can now only be a shareholder for 25% or more in one micro company. New thresholds apply regarding the maximum revenue of the micro company. If your revenue remains under €60,000, you can still apply the tax of 1% on your revenue, just like before. However, for businesses with a revenue between €60,000 and €500,000, a new rate of 3% applies. If your revenue exceeds €500,000, you no longer qualify as a micro company. In essence, tax residency in Romania for digital nomads can be more beneficial when combined with a company setup, especially if you qualify for the micro company tax regime. Now we move to Georgia, a country known for its hospitality and beautiful landscapes. The country has easy access to both Eastern Europe and Western Asia. If you want to apply for a digital nomad visa in Georgia, you'll need to have an income of €2,000 per month or show you have €24,000 in your bank account if planning to stay for a full year. When it comes to taxes, Georgia imposes a flat personal income tax rate of 20% on income derived from Georgian sources. This is because Georgia follows a territorial tax regime, taxing only income earned within the country. For entrepreneurs, there are favourable tax regimes based on turnover, with micro and small businesses, statuses offering tax exemptions or reduced rates. If you have a turnover of less than equivalent of €11,000, you qualify for the micro-business status and don't pay any income taxes at all. If your turnover is above the equivalent of €11,000, but below €180,000, you will qualify for the small business status and your tax liability will be equal to 1% of your turnover or revenue. Corporate income is also competitively taxed with a flat rate of 15%. Taxes are only due upon profit distribution, and a 5% withholding tax applies upon distribution, leading to a total tax rate of 19.25%. As for social security and pension contributions, Georgia doesn't levy social security contributions. Contributing to a pension scheme is obligatory, but only for employees. So if you are self-employed, this doesn't apply. Concluding your discussion about tax implications for digital nomads in Georgia, if you decide to establish tax residency in Georgia, there could be the issue of double taxation to take into account. Double taxation occurs when two countries see you as a tax resident of their country. Consequently, they would both want to levy taxes on your income. Luckily, Georgia signed double tax treaties with many Western countries in order to avoid double taxation. However, it's always recommended to double-check given information. Next up is Greece. The income requirement for the digital nomad visa is €3,500 per month after taxes. For the relocating professional program, there is no minimum income requirement. Greece has two programs for which digital nomads could qualify. The first one is the digital nomad visa in the strict sense and is only open to citizens of non-Schengen area. The other program is orientated to attract relocating professionals. Hereby, you can get a tax reduction of 50% for up to 7 years if you commit to remain a Greek tax resident for at least 2 years. This tax reduction means that you can divide the tax rates mentioned before by 2. This signifies the actual maximum rate amounts to 22.5%. When it comes to Greek tax residency, Greece will tax your worldwide income, the income earned in Greece, but also any income earned abroad. Greece applies progressive tax rates on income from employment or business, which start at 9% and go up to 44% as from an income of €40,000. For rental income, they also apply progressive rates. These range from 15% to 45% as from €35,000. If you receive rental income from abroad, this income is exempt from taxes in Greece. The condition of this exemption is if the country where the real estate is situated has a double tax treaty with Greece. Investment income is taxed at fixed rates. On dividends, a rate of 5% applies. For interest, the rate is 15%, and for royalties, 20%. Additionally, you need to account for a solidarity contribution. This contribution is levied on income as from €12,000 at a rate of 20%. It goes up to 10% on income above €220,000. As for social contributions, they are divided in different categories. Minimum contributions start from €210 per month and go up to €566 per month. Summarising, while the tax break can significantly reduce your tax liability, the progressive tax rates may still be considered high for some digital nomads. So there you have it. 5 European countries that offer attractive tax benefits to digital nomads. We've journeyed through the unique landscapes of Croatia, Malta, Romania, Georgia and Greece, each with their own digital nomad visa programs and tax implications. As we've seen, it's vital to understand the tax regulations and application procedures of your chosen country. Remember, each of these countries has different minimum income requirements that need to be checked before making a visa application. And while some offer tax exemptions, others have low tax rates that can make your digital nomad lifestyle more financially beneficial. In essence, it's about finding the balance between living in a country that fuels your creativity and productivity, and one that also supports your financial well-being. Thank you for joining us on this journey. Until next time, safe travels.